this is where money starts shifting. And it's this easy. You have to want to manage your money. It sounds simple, but so few people want to manage their money. Hello, and welcome back to the Wise Money School. Today I'm going to talk about your money job. And that's it, that you have a job when it comes to your money. What do you think that is? It's probably something different than maybe what you've thought about before. So today I'm going to share with you a different way to think about your money. And if you start thinking about your money and behaving with your money this way, I promise you're going to see a radical difference in how your money starts to grow and accumulate, which is the goal. That's what wealth is. So your money job is what I call cash and cash flowing. And it's these two concepts. When you start thinking of your money in terms of cash and cash flow, things are going to start to shift because, again, it's a different way, a whole different thought process, and a whole different way to engage with your money. And another way to think about this is, like in financial terms, is to be the CFO of your financial life, meaning your role with your money is to be a CFO, is to be like a certified or a chief financial officer, where you're responsible for certain outcomes with your money. So this here, my amazing artwork, as you can see, that this represents a building. And this building here, this little thing I drew here is a building. This represents your business. And so this is for entrepreneurs. And it's really important when we're self-employed or small business entrepreneurs that we think of our business in terms of cash flow and cash. So what happens with cash flow in your business means, let's just say that we made $200,000 of sales this year. So this means the business earned $200,000. That was money, that was cash that flowed in. And it really does flow in, right? It flows in from the different, maybe it flows in from PayPal. It might flow in from the different credit cards, like however it flows into your account. But you have customers out here, they pay you, and this $200,000 flowed into the business. So that's cash flow in. Then what happens is we pay all these bills of the business, which are called expenses. And let's say in this example, what's left over is $100,000. So that's cash flow. $200,000 in, there's the $100,000 that goes out to pay bills, and there's $100,000 left over. That's cash flow. So that's what a healthy business is. A healthy business is bringing in enough sales, but it's actually has this output of cash flow also. And it starts with cash, but we're going to flow it. So it's really important just to understand that you can have $200,000 of sales, but if your expenses in your business are $200,000, then you're not going to have any cash flow. What oftentimes happens is that I work with business owners and look at their books when they're telling me, like, Krisstina, I'm working so hard and I have all this money coming in, but I don't have any money left over. And a lot of times what happens is that even CPAs can say, hey, you have $100,000 this November, so go spend a bunch of money in your business so that you don't pay taxes on it. And that can actually be a very flawed strategy, because when I show you why you want to flow as much cash as possible out of your business, it'll start to make sense. So the idea here is to really maximize cash flow. Now, in the business over here, there's something called cash. And so it's really important that as you're bringing money in, you are storing some money like over time into these cash accounts. And mostly it's just this reserves bucket, because you need some money there. It's like the rainy day fund of your business, but you need to make sure you have some cash stored. So if you have low months, whatever that is, you can just dip into that. And when you have higher cash months, you can repay it back. So it's really important to make sure that you have some stored cash in your business, which makes it easy to feel more confident in the business, and it gives the business more strength, and it's more healthy. Now, the idea, like I said, is this $100,000. So you could keep it in the business. And what a lot of people may do also is they keep it in the business, but then they reinvest it in the business one way or another. So there's no amount of money left for flow. But when we think in terms of cash and cash flow, it changes. So now what we want to do is take this $100,000 of cash, and we want to start flow to the business from $200,000 to $100,000. All this money flowed out to pay all those vendors and everything. We take this $100,000 left over of cash, And now we flow it into our household. So we move it out of the business and out of the business bank account, and we flow it into our household. And to really think about this, you're flowing it into your household because the house, this is where you live. This is where you pay your bills. This is where you have dinner. This is where you have conversations around where are we going to go to travel, or do we want to remodel the kitchen? And this is where we do the homework. Like all of our expenses or all of the money that we use for our life to really enjoy our life is not in our business, it's in our household. So think about this. Again, this is a different way to think about this money. You're going to flow through your household. And the idea is the same. So as your money job is to really manage this cash and manage the cash flow as your role is what you're doing. And you're just starting again with this $200,000, and that's your money. It's $200,000. And think of it like sometimes it's just money that shows in, an account or money just shows on QuickBooks, but really visualize it like it's $200,000 of cash that's coming in, because when you really relate to that amount of money that's coming into your business, it really changes things. You start to realize like, wow, that's a good amount of money. And then when it's that $200,000 that you worked so hard in creating and bringing into the business, your role is to really manage that and start flowing it so that one, you have the cash for a healthy business, but you're flowing it to you so that you can now run a healthy financial household. So now we're taking this $100,000 here up top. And again, now we have $100,000. And to think about this, like, wow, $100,000, think of it, in $100 bills. And if you had all this $100,000 of just cash sitting around, it would look like a lot of money, and you might really appreciate it and think about it differently. But now the idea is we have $100,000 that came in, cash in, and now we need to flow it. Now, what most people are doing is you have all these household bills and expenses, and that's the mortgage, that's the car, that's the credit cards, it's utilities, it's the insurance, it's the groceries, it's the clothing, it's the YouTube, it's the Netflix, it's eating out, so on and so forth. So we accumulate all of these bills. And in most cases, the total amount of our bills is the same amount of our income. And that means that we are not doing our money job very well. In fact, we would be fired, because if we're going to do our money job really well, our bills, we're going to make sure that our bills don't match up to our income. And that's typically what happens. What we do instead is we think in terms of cash and cash flow. So the idea is it starts with, you would flow your money to create cash, and then take the cash and then you flow that. So it says cash, flow the cash, cash, flow the cash, cash, flow the cash. And when you start operating your money this way, it's amazing how it starts behaving. Money loves to be managed. Money loves to do its different jobs when it's given these jobs, and it's our job to give our money the jobs. So what we want to do is we want to take this $100,000 and it's flowing into like maybe our main household checking account, but we're going to flow a portion of that. And let's just say in this case, it's $20,000. And we're going to flow that into an investment account. So it's a separate account. And you're flowing the money out of your main operating account, your checking account. You're flowing a portion into this investment account. You're flowing a portion into your rainy day. And so a portion of that, let's just say that we put $5,000 into a rainy day bucket, is just an example. So that's a rainy day bucket. And you're flowing it out of this account and you're flowing it into this account. And then there's another bucket that I advise that you do. This is called the dreams bucket. And it's a separate account, and you're taking a certain amount. And let's just say you're doing $10,000 into your dreams bucket. And the money flows out of the account and you flow it here. Now what happens is, and then everything left over is what's to cover the bills. And so it's not about budgeting. I don't really talk about budgeting, but ultimately this would be your household budget. Is your $100,000, in this case, let's say it's after tax, minus your $20,000, minus your $10,000, minus your $15,000. So that becomes your household budget, so that you make sure every time you get paid, you can flow your money into these different accounts. So this is $20,000 cash. This is $5,000 cash. This is $10,000 of cash. and it's sitting there in these different accounts. Now, how do you flow these monies? This money here flows out to pay all the bills, but this $20,000, that's going to go to investments this rainy day. This flows out, let's say, when you have a fender bender, and there's that deductible, for example. So it's a $5,000 deductible plus other expenses that you have to pay. And you're like, wow, this is so great. I have money just ready to do its job right here. And the money's job here is to pay for this deductible and to pay for the cost of this fender bender. It won't affect our day-to-day life whatsoever, our monthly bills, because this money's ready. It's cash there ready to do its job. So that's what that rainy day fund is to cover those unplanned expenses. And there's always unplanned expenses. So that's why you flow money here so that you have the money to flow out when it's needed. The dreams bucket, it's really important that you create this dreams bucket. And again, this separate account where you're saving cash for what I call these expensive future expenses. And that's something like a vacation, for example. So I talk to people all the time, like, man, like, when I say, like, if money was really working for you, what would be different? They'd be like, I'd be doing a lot more travel. So I hear that all the time. It's probably 9 out of 10 people I talk to say, man, I do a lot more travel. And so they're not traveling. Why? Because they don't have this money set for this vacation. So this dreams bucket, you flow this money in there. And then when you want to go to Disneyland and take the family on a Disneyland trip, it flows to Disneyland. And, what the return is all these great experiences and happy memories. So this is what we're doing is we're just cash flowing our money. Now this cash, and we're saving cash to be able to cash flow it. This $20,000 then goes over here to maybe put a down payment on a house, or you're saving this to put a down payment on a piece of real estate. So you take your cash, you put it towards maybe a down payment, and then you're looking at, let's say you make this example, $20,000 down. You probably need more than that, but again, it's example. And then let's just say that this piece of real estate cash flows $25,000 a year. So that's great. So now you have this money from your business, this $100,000. You're flowing it through your household like this. And now you took $20,000 of cash that you saved. You move it here to buy a piece of this investment, you buy an investment property, but you're looking for cash flow. So now you take this cash flow and you put this in your bucket. And next time you have the 20 plus the 25,000. So you're saving cash. You're taking this cash flow, you're moving it back into cash over here to save the cash. And then you buy your second piece of investment real estate. Use this cash for the down payment here. And you put the down payment, let's say this one cash flows $25,000. Now you put that cash flow back into the cash bucket, and you just keep doing this. So it's this game of storing cash and using that cash to create additional cash flow. And you see the source started here with our very first paycheck. So if you're a business owner, an entrepreneur, this is how it works. If you're a W-2, let's say you have a $100,000 salary, again, it would just pass through this household exactly the same way. And this, your paycheck here is the source. It starts at 100, but the exact same method works. It's cash flow. We're really looking to manage our cash into these different buckets to make sure we have cash and to make sure we're flowing it out into these different areas to be able to convert to whatever we want to buy or have that money used for. And when you start thinking of all of your money, just cash flow, it's very different than just this, the standard way that money's taught, which is make money in your business or going to work. Don't get into debt or pay off your credit cards, and then make sure you max out your 401ks or Roth IRAs. And then that's your key to getting wealthy. It's like, that's true. But that's all true. But when you really start thinking about, I want to become a millionaire and I want to build wealth, you're going to definitely build it for sure. And you're going to build it much faster when you start to train yourself to think that my job is to manage cash and create cash flow, turn that cash flow into more cash and the cash to cash flow. And ultimately what happens over here with your portfolio is if you're making 25 off of each of those properties, that's $50,000, $100,000, $150,000 of cash flow. from your investment properties. Granted, this is going to take time, but when you just are not concerned about getting rich quick and maybe just following the normal everyday advice, but really train your thinking, like managing and flowing every single dollar through this to this place of financial freedom, when this cash flow here meets or exceeds the cash that you create from your business or the cash that you create from working basically at your job, this is where money starts shifting. And it's this easy. But again, it's a different way to think and act with your money. So what's required to do this? One, again, is this thinking of cash and cash flow in my money. It's like a conductor that's moving the music and over here, and I'm going to do this with the percussion, and over here, this with the strings, and this over here with the piano. And it's moving the music the way the conductor wants to do it by focusing on these areas and then having one musical masterpiece. This is your financial masterpiece, again, when you're the CFO of your financial life, and take full control of it. So what's required? What's required is you have to want to manage your money. It sounds simple, but so few people want to manage their money. They just want to create all this financial freedom over here, but they want somebody else to do their books. They don't want to look at their money. They don't want to manage it. They don't want to have a budget. They don't want to do it. They just want to, I guess, get wealthy without having to do any of that type of work. So to be your money job, to cash and cash flow your money, you have to manage it. You have to look at this $200,000, manage all the bills and expenses here, really know how much money you want to profit and cash flow out. You have to want to manage it through your household. If you're married, you want to talk about this and say, hey, how much money do we want to put into our investment bucket? How much money do we want to flow into our rainy day? How much money do we want to flow into our dreams? What is left over to our bills that we have to pay our bills? And who's going to, which one of the partners is going to manage it? How are we going to talk about it? But this is called marriage and money. When you're on the same page with your partner, you can create anything with money. Yet money is the number one argument in the household and the number one or two reasons for divorce. So when we have this type of way of thinking and methodology, we can get on the same page, and now we're flowing money as a couple. And then finally, when we're flowing money out, not just to, hey, max out my 401k and let somebody else worry about my financial future, but when we're actually taking this ownership and managing move the money by saving cash and moving it into cash flow. Ultimately, that's how you know that you'll have enough. But you have to manage your money. You want to count your money. You want to spend time with it. You want to have QuickBooks or something like that. That's the tool in the system that allows you to do this very well. And you have to really get good at saving, which means you have to manage your spending. So money management is about managing your spending. But this idea, it's not just about saving, like, hey, I'm a good person if I save. It's saving for the purpose of creating cash. And it's always this balance of having cash and having enough cash in your business and cash sitting in your household account to cover future bills, but not having too much cash. The excess cash gets moved over here. But that cash is financial security. So when we don't have financial security, it's because we don't have cash. We don't have these buckets. When we feel month to month and we feel like we're not getting ahead, it's because we're not building this piece over here. So to sum that up, what I like to close it out with is saying, I think we've all heard the saying that says, cash is what? Cash is king. So yes, we're managing cash. We're starting managing this $200,000 cash all the way to the end. But cash is king. We want to grow cash. We want to build cash. We want to manage cash. And then ultimately we want to flow that cash. And that's what I call here is cash flow is queen, the king and the queen. And this is the king and queen that's going to win the financial chess game. So that's what I have here. If this was helpful, let me know. Just put down in the comments that any aha that you have. As always, please subscribe. Better yet, share this with your friends.